Welcome to Apple School of Knowledge. What is inflation and how it works? Inflation is an economic indicator that indicates the rate of rising prices of goods and services in the economy. Ultimately, it shows the decrease in the buying power of the rupee. It is measured as a percentage. This quantitative economic measures the rate of change in prices of selected goods and services over a period of time. Inflation indicates how much the average price has changed for the selected basket of goods and services. It is expressed as a percentage. Increase in inflation indicates a decrease in the purchasing power of the economy. This percentage indicates the increase or decrease from the previous period. Inflation can be a cause of concern as the value of money keeps decreasing as inflation rises. What are the three types of inflation? The three types of inflation are demand pull, cost push, and built-in inflation. Demand pull inflation, it occurs when the demand for goods or services is higher when compared to the production capacity. The difference between demand and supply, shortage, result in price appreciation. Cost push inflation, it occurs when the cost of production increases. Increase in prices of the inputs, labor, raw materials, etc., increases the price of the product. Built-in inflation, expectation of future inflations results in built-in inflation. A rise in prices results in higher wages to afford the increased cost of living. Therefore, high wages result in increased cost of production, which in turn has an impact on product pricing. The circle hence continues. What are the main causes of inflation? Monetary policy, it determines the supply of currency in the market. Excess supply of money leads to inflation, hence decreasing the value of the currency. Fiscal policy, it monitors the borrowing and spending of the economy. Higher borrowings, debt, result in increased taxes and additional currency printing to repay the debt. Demand pull inflation, increases in prices due to the gap between the demand, higher, and supply, lower. Cost push inflation, higher prices of goods and services due to increased cost of production. Exchange rates, exposure to foreign markets are based on the dollar value. Fluctuations in the exchange rate have an impact on the rate of inflation. Who benefits from inflation? Inflation being a cause of concern for the economy doesn't affect everyone in a bad way. It is a boon for a certain set of people. While consumers lose a part of their purchasing power to inflation, investors gain from it. Investors investing in assets affected by inflation, if held on for a long time, will certainly benefit from it. For example, an increase in housing prices might affect consumers. However, those who have already bought a house will benefit from capital appreciation.